Currency, it's the largest and most liquid market in the world. I'm Brigid Taylor, and this is Currency Wars. The rand continues to trade within its current range of 10.65 to 10.80 despite the negative domestic fundamentals. The global backdrop of benign growth and flat rate trajectories make this a very somber market, and volatility levels are very low. This week, however, the gross domestic product data confirmed that there's weakness in the economy, showing that growth slowed year on year to 1.2% from 1.6% previously. The biggest drags on the numbers remain the mining and manufacturing sectors. Weak economic growth is rand negative, mainly as a virtue of its impact on the South African Reserve Bank's willingness to tighten monetary policy. The weakness in economic growth, a dip in consumer price inflation, a steady rand exchange rate, falling international oil prices, and ongoing signs that food price pressures are easing diminish the chances of Monetary Policy Committee hiking their rates in September. The rand, however, did manage to gain back some strength on the back of 5 consistent days of net foreign purchases of South African government bonds. This as local interest rate hikes are starting to look less likely. Meanwhile, in the US, durable goods orders showed a remarkable jump of 22.6% in July. This was mainly due to 324 aircraft orders being placed at Boeing. Overall, however, the numbers signal sustained expansion of the US economy and continued support for growth from rising business investment. The US consumer confidence also climbed to its highest level since before the recession. The data adds to evidence that the United States economy continues to strengthen, and perhaps more rapidly than many, including the Fed, have anticipated. With monetary policy remaining accommodative in the Eurozone and Japan, and potential for tightening from the US and England, the rand faces headwinds in continuing to attract foreign flows. Now that we've had a look at the big economic data moving the currencies, let's take a look at where the rand could go in the week to come. Joining me this evening is Colin Wakefield from RMB and Cilliers from TreasuryOne. Welcome, guys. So let's talk about where we've moved in the last week, Colin. I mean, we looked at the range last week with regards to the tendencies around the rand. Yes. And obviously we've had that GDP data out. However, the rand really is benign within the middle of the range.
Absolutely. I think what's encouraging is that we were right for a change last week, is that we were looking for the range to hold up in the 70 levels. The big driver this whole week really has been developments out of Europe. Yeah. And so I think broadly speaking, carry assets have had a pretty good week. We've started to see some inflows back into our bond market after almost a month of daily consecutive outflows. Yeah. And also, as you mentioned, the GDP number, not as bad as some people had expected, although missing expectations of the analysts. And I think that's pushed us right back to the middle of the range. Yeah. And we are going to have to wait for developments overseas to drive us. Markets are so lackluster, middle of the European summer holidays, very little going on.
Well, exactly. And I think, Andrew, I mean, you've been doing a bit of travelling as well. And just, you know, if we look at South Africa with regards to that growth projection, you know, if you look at what's happening in other African countries, we really, really are on the back foot. I mean, we're kind of sitting in a scenario as if we're part of Europe rather than being part of Africa.
I think we're on the back foot, yes, but I think what one also needs to take into account that South Africa, I think, is far more part of the international community than the rest of Africa. Yeah. So I think we dragged into the international economic scenario a little bit more than them.
But we don't do ourselves any favours. I mean, if we look at what the major drags were, being the mining and manufacturing, I mean, that mining scenario, without a doubt, has had a negative impact in terms of our growth projection. If you look at investment for business, if we look at the retail type stocks that are on the market, the fall off that they've had with regards to the projections around growth. So yes, I agree with you. I mean, we are part of the international community. However, you know, is there no way that you think that business should be able to position better in South Africa as a part of the African continent?
I think the only way is to actually expand into the African continent a lot more, because there's a lot of scope for growth in those areas, where in the Americas and the Europes and so forth, your scope for growth is very little. Yeah. So I think our focus should be far more on Africa rather than on our traditional markets with whom we've dealt in the past.
In the past, exactly. So
that will get
and there's opportunities, right? I mean, we've seen the likes of Shoprite, the likes of Woolworths, who've opened up stores in Africa, done phenomenally well. But if we bring it back home, I mean, if we look at the South African scenario in terms of, you know, bringing in those foreign flows, and that's one of the major dynamics that we're going to be looking at as we look into the trade numbers later this week, and obviously the current accounts, etc. We looked at the Moody's downgrade of the banks last week, and that was a major concern in terms of how we're managing the South African economy in an environment where the rest of the continent business doing well. We've got this benign growth overseas. However, from a South African perspective, it is a little bit of a concern because of the fact that in this environment, it looks unlikely that MPC will hike. So yes, for now, we've continued to see flows. And what is your feeling with regards to the likes of the European investor in the scenario that we find ourselves, the comments coming out of the Swiss National Bank, the comments coming out of the ECB?
It's always a relative game. I think you've highlighted a lot of the weaknesses in South Africa, and not just relative to Africa, which has still got a long way to go, and that's a really exciting growth story, but also, in fact, relative to other emerging markets.
Yeah.
And I think I guess the big risk for South Africa is, despite a very difficult global environment, we don't address those issues in South Africa that are specific to South Africa that will not only affect portfolio flows, but I guess the real juicy ones is the FDI flows that we're after as well. And Deputy President Ramaphosa was speaking this morning about some of those issues. Everyone knows what the issues are, but we need to make the difficult decisions, not only in terms of the structure of the economy, but in terms of the microeconomics that will lead to the resolution of a lot of the problems that have hampered us locally, that we do have control over despite the weak global backdrop.
Well, I think that that's the thing. And I mean, it's the perceived investment opportunity that South Africa offers in an environment where we're sitting in Africa. So I think that those are the things that need to be managed. But if we look at South Africa from the perspective of, as you will with your portfolio of investors, Treasury Solutions, managing a currency and managing your book around the exposure that you're expected to see in terms of the currency, that band or that lack of volatility offers obviously that benefit. So there's that upside and downside in terms of the rand not really moving much in terms of a trading perspective, but from a business management perspective, it certainly must be something that's positive.
Very positive, and the one that we always say to our clients that you know, you're not there to actually take views on the currencies.
Yeah.
If you want to take views on the currencies, you can just go to the casino and play black or red.
Yeah. Not quite.
You're
but
more likely to make money there than you are on the currencies. But you're there to manage risk. And within that risk management, take some of the volatility that the currency could introduce into your income statement, out of your income statement, so that you can continue with your business rather than focusing on what currencies are doing.
Well, it's interesting. I mean, we saw Imperial come out this week, and one of the businesses within their portfolio that lost money was their car imports, and that was as a function of their exposure to the rand moves that they hadn't forward covered. And that's one of the interesting factors when we look at this sort of scenario. So let's talk about for those people that have got exposure to currency, because almost everybody is a net importer in South Africa, you will have exposure to the currency. However, it won't always be dollar-based. So let's talk about the cross rates. Let's talk about the euro rand, the pound rand, what we can expect in terms of those type of vehicles, and where you think the likely trajectory is going to be.
I think the two interesting ones, firstly, I guess more from a flows and macroeconomic data perspective, is the Aussie rand. Large South African retail group Woolworths, of course, has acquired a sizable, if not whole chunk in a retailer in Australia. And of course, the extent to which Woolworths chooses to engage in any pre-hedging or execution of the purchase of the Australian currency.
How much is it again? It's about 8 billion.
It's just over 7 billion, 7.8 billion rand. It's a really sizable flow. We don't yet have further details as to how well Woolworths is going to mix up the financing, debt versus equity, whether they're going to take on debt in rand or indeed in Australian dollars, and I'm sure they'll communicate with the market at the appropriate juncture. So certainly that's a good one to keep an eye on. And then given the really worrying low inflation numbers in Europe, the euro rand has dropped from 10.30 not so long ago, 2-3 weeks ago, to 10.04 just before I left the office. I beg your pardon, 14.04. And I think that's been driven by really worrying economic data out of Europe. And so we are at some key technical levels where we are now. So if you're importing capital machinery from Europe or exporting to Europe, that's certainly something to keep an eye on.
Absolutely. And from your client base, is it more geared towards the Europe rand scenario, or do you look a lot more in terms of pound rand, in terms of the cross rates?
Well, I've got a lot of clients that's really involved in both markets, in the pound market and in the euro market. And that's been, the pound one has been really up at the over 18s and fairly stable, whilst the euro rand was still moving around. The pound was still very stable. And now in the last week or so, we've seen that the pound is also down to the 760, 765 areas. And what I've said to some of my clients, if you look at these things, I mean, we've been speaking about the rand that's benign, and it's actually not benign. Because the rand should never be spoken about just as something against the dollar. There's a basket of currencies.
Correct.
And the way I've put it to my clients is, you always have to look at it's sort of a car and caravan situation. Which one is the caravan and which one is the car?
Yeah.
And at this point in time, the rand is really the caravan. It's
Yeah.
being pulled by the car, and the
Yeah.
car is the European figures and what happens there.
In the Eurozone, and that I think is the key. And I think for, looking as we look into the week ahead, obviously I'm going to ask you to give me your levels, but I mean, one of the key factors at the moment is the view around the growth scenario within the Eurozone. The central bank in Switzerland is giving signals again that they're worried about that 120 level, which they've been trying to protect. So a lot of European investors moving back into the Swiss franc. However, one way to deter that is to create negative interest rates in Switzerland,
Yes.
which ultimately means that it continues to see foreign flows into the likes of ourselves being in South Africa, despite all the fundamentals and the microeconomic issues. Right, now that we know where we stand, it's time once again to pick out the big guns. So we're going to ask you to give your levels, give a bit of trajectory, and let's talk about not just the dollar rand, let's talk about the cross rates as well. Carl, do you want to lead off?
I think the one that everyone's watching is the euro rand. We've gone through some key levels. So if you're a little bit nervous, if you think the levels are relatively attractive, now is not a bad place to potentially look at covering your euro exposure. But on a pure technical basis, I think 1380 is a level on a 1 to 2 month view that I think we're going to see. The inflation data that we're going to get out of Europe tomorrow, of course, will be a key impetus to get a sense of whether the ECB is going to act or not.
Yeah.
On a longer term basis, I think the bias is towards more action. So 1380 is definitely a relatively attractive level to look to buy euros. On the Aussie rand, I think that's a bit difficult to say. Aussie is affected by a lot of the flows and the commodity related issues that South Africa is. So I think a very narrow band around current levels.
Okay. Andre, have you got anything that you'd like to add in terms of your view, especially around the pound rand?
Well, I keep the euro rand cross rate a little bit out of it, and I said if we break the 132.5 level on the euro against the dollar, I think we paved the way for a level of 129.
Okay.
And in that process, I think the rand will move to its levels of 1380, 1385, as my esteemed colleague next to me said.
Yeah.
So from an importer perspective, I'd be sort of reluctant to rush in over 14 and buy anything at this point in time. I think the cost of forward cover too expensive as well.
Yeah.
So I sort of sit back and be calm a little bit. Exporters, on the other hand, if I were them, I would take the forward points that I can get off the table at this point in time and rather get my short-term commitments.
And be paid on the interest rate on the flip side.
Out of the way.
So you've got a positive carry. So just in conclusion, the strategy really for this week is that we think on the crosses that there's a lot of potential for opportunity for rand to strengthen against the crosses. So looking for 1380 on the euro. On the rand, continuing within that band that we've been trading, which is around 1060 to 1080, and doesn't really look as though anything significant will happen on a dollar rand basis. However, as an exporter, look to potentially cover some of your exposure. That's all for Currency Wars this week. Please feel free to send your questions and comments to either at CNBC Africa #CurrencyWars410 or myself at Brigid R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.